Do you want to see how the pros trade? Then continue watching, because I guarantee you what you're about to see and me break down this live trade I took on Ola Prime TV. We're live every single trading day where I trade live along with other trading coaches, and you get to see how the pros truly trade. Now I'm going to break down this trade and show you stuff that you've probably never seen before on YouTube. Okay, so without further ado, let's roll the intro and let's get cracking. Alright, I'm going to go ahead, roll the clip of the trade live. And remember, this was completely live. You can tune in. The link is in the description down below. Ola Prime Official is the channel. We're live every single trading day where we break down the markets and take live trades. So you get to see this in real time. But I'll show you the clip of the trade I took. And then I'll show you a breakdown afterwards of explaining why I got in and why I exited to catch such an awesome $1,000 trade like that. That's it. Okay, now we're starting to push down. I just need sellers to come in. I'm also in my cash account, so I've got my cash account on my mobile. All right, I'm out on my cash. All right.
Good.
Come on, don't fail here. There we go. No! I flattened.
By
I'm at
mistake?
954. No, purposely. I thought it was like over 1,000. It was, but I must have got slippage. And I am now officially $46 away from 1,000. So I'm gonna make $46, and then. Okay, so here is the actual place on the chart where I took the trade, and as you can probably see, I took it like here. My stop would have been around there, and I got out pretty much. I think I got out around here somewhere. So basically 30 points on the NQ, 30-point trade, absolutely beautiful, really small drawdown. I was in drawdown for a minute or two, and then boom, 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 boom. Now this is just looking at the candlesticks, and most people on YouTube, as you probably know, you know, they draw squiggly lines, they do a bunch of retail stuff, and that is not the reality of trading, guys. Okay, so if you want to see how the pros trade, keep watching. What we guys use, what the pros use, is stuff like order flow and the footprint chart, right? Because if you look on the candlesticks, how did I know? I mean, everyone would be like, oh, this is such a bullish market, and you're absolutely right, you know, very, very bullish. Look how the market is going up. How did I know in that exact top is going to be, exactly in that area is going to be pretty much the top of the market? Because look, it pretty much is the top. All right, we revisit it the next day, and then the next day during the US session we blow through it. But either way, as a scalper, you only need to, you know, grab 20, 30 points, and you, like I showed, you can make $1,000 like that, right? There is another high there, yes, there is an older high, but apart from that, so you could say, okay, look guys, it was resistance, so you shorted out resistance. Yes and no. I mean, it wasn't because we were in a resistance area that I shorted it. I shorted it because I used the footprint. So I'm going to switch over to the footprint, and I'm going to show you what I saw. All right, here we go. Let's zoom in. Look at that. Look at that. Beautiful. Right. First things first. What are these numbers actually showing you? Well, these numbers on this, the way I got my footprint set up, is to show me the delta, so the difference between the buyers and sellers. So for example, in this little cluster here where it says 278, there were 278 extra buy contracts than sellers, right? But you can also switch, and you can play around with it. So you can go to the settings and you can switch to buy and sell, for example. And as you can see, you know, if we, you know, there were 40 contracts sold in this area here, in this little cluster, and there were 261 contracts bought. So the difference between that is obviously 221, right? So the delta would be 221 contracts, right? And I like the delta because it just shows me where, you know, the aggression is in the market, right? So personally, some people you like to use the actual buy and sell. You can look at the total volume. That to me isn't that much help. You can also look at the ladder as well. I'll go into that maybe in a separate video one day. But it's basically the buy and sell as well, but it kind of highlights, who's stronger. But I prefer the delta. So we switched it back to the delta, 221 difference. So it's really simple, really self-explanatory, right? And these are real orders. These are the real contracts straight from the CME exchange. You can see at the top here, right? This is the futures market, the CME. This is the exchange. It all goes through one exchange. This is the NQ, so the NASDAQ. Okay. So this isn't just made up. This isn't some indicator, with made up data. This is the real data, the real actual buy and sell contracts being traded through the exchange. So this is real volume data. Okay. Something you don't get with Forex. But anyway, so why did I short right here? Well, let's take a look at what you see in the market, right? So number one, the actual move up, this little move up that we had, right? Okay, you could see where the aggression came in. You had 122 extra buyers, and then more buyers came in at 221. So a lot of heavy buying happening, right? 278, 167. And all these buyers really are doing quite well. If you bought here, for example, you'll be pretty happy as a scalper. As the market starts pushing up, you're celebrating, you're quite happy, right? And then these people jump in as well. They're trying to make more money, right? They're trying to, hoping that the market keeps going up. But then we start seeing, again, another 181, more buyers coming in, but the market just kind of stops. It just kind of stops right here, right? And then slowly we start dipping below these buyers. Okay, there's a lot of buildup of buyers, but they stop becoming effective. They fail to push the market up, right? And the moment we start trading below, I thought, okay, it's time to enter a trade. I got in for a quick sell. My stops would have been, just above here, and I was targeting back down to, these lows here, right? So as you can see, it worked out absolutely fine. Had a bit of consolidation here, but again, buyers, and this is where, all right, we pushed down a little bit and we started going sideways, and this is where it really cemented that this trade is going to work out, because again, buyers are trying to come in heavy, 113 contracts, 152, but they're just not able to get the market any higher. They're struggling, they're not effective, they're inefficient, right? Whereas if you look at the sell side, we barely need much sell contracts, 22, 60, 30. Little amounts, right? Hardly that much sellers are actually in the market, and they're being very efficient. They're actually pushing this market somewhat down. And all right, here we were going sideways, but considering how many buyers were in the market compared to sellers, right? If you just look at this area here, you got all buy, and then 4 sell contracts, like next to nothing, right? Sellers are holding back buyers with little volume, okay? And then, we break out a bit, still buyers still trying to come in, sellers are starting to pick up a bit bigger numbers now, which is again a good sign, bigger numbers coming in, and we just start flooding down, right? Now, I'm still in this trade, I'm holding it. Now you can see bigger sellers really coming in, 104, and we're kind of, starting to fail. Now the same thing happens on the sell side. Look at them start failing. 89 isn't the biggest, and 50, but they're at the bottom of this candle, and we instantly start rejecting them. We're trading above. This is when I know it's probably time to get out this market, right? Okay, get your money and leave. And you can see this happen, earlier on in like here, right? You can see it clear as day. Sellers trying to take control of the market again. 156 contracts, 190. Starts trading above them. These sellers start dropping out. Buyers coming in and push the market up. So what's important when it comes to trading, especially as a scalper and using order flow, recognize that momentum can shift very quickly, okay? It doesn't have to, only because you see, like in this area here, oh look, sellers are trapped and buyers have come in and they're effective. that the market is just going to continuously push up. Right? Doesn't mean we're going to hit all-time highs or it's just going to spark a whole new trend. No, not at all, right? But it does, for most part, right? The probability is for the next few minutes, you're probably going to get movement in that direction, okay? And that's exactly what you kind of get as a scalper, right? And that's all we want, you know. My average trade time, I believe, is like 4 or 5 minutes, right? So not very long, okay? But you can see this happen day in, day out. Here is a great buy opportunity, right? And it happens constantly, right? Look at all these sellers coming in, 155, 190, 200, especially here. Look at that, 324, okay? And they're just not able to push the market any more further down, right? That's a lot of volume. What is going on? So there's someone in the order book, right? Absorbing that sell pressure, not allowing it to get any lower. They're feeding a big buy order, essentially, right? And then look, they're still trying to come in, not really having much luck, still not having much luck. And then as we start trading above, you know, all this kind of area where the sellers came in, look at the numbers get big on the buy side. That's a lot of V sellers, you know, who came in, who are trapped, basically hitting exit, right? Canceling their order, flattening, getting out of the market at a loss, right? And then it shows up as a buy order and the market's able, and that pressure is now released and the market's able to pop up, okay? So it happens constantly, like all the time, well, all the time, but it happens, you know, quite often. I'm talking, you know, like 50 times in a trading day, easily, right? You could catch these kind of trades. And you only need to catch 1 or 2. That's the beauty of it, right? You don't have to catch all of them. You know, an hour a day, market, probably not straight after market open, but give it a bit of time to cool off. And then, you know, we're talking 4 p.m. Eastern, for example. Yeah, start, not 4 p.m. Eastern, sorry. We're talking like 4 p.m. my time in the UK, but, you know, we're talking like 11 a.m. Eastern, maybe midday, maybe after lunch, 1 p.m., whatever, right? You know, you just need to be there on the charts for an hour, be a bit patient, wait. You can obviously use support and resistance as well to kind of, you know, like if you go to a near resistance area or a support area and then, you know, set an alert there, and when the market gets there, all right, jump on a chart, have a look, wait for this to set up, basically. Wait for, you know, in this case, you know, buyers to come in quite heavy, fail to push the market up, start trading below them, boom, jump in for a sell, catch your 20, 30 points, whatever it might be, you know, and obviously keep holding the trade. The trade can keep going. Hold it until you see the opposite happen, right? Until you see your side of the market starting to fail, then you can get out the trade, right? You don't have to get out instantly. And that's pretty much it. This is how the pros trade. We scalp. And if you want to see, you know, results, right? Because I know, you know, this is all well and good. All right, you saw the live trade. I played the clip of me actually taking this. But if you want to see, you know, actual results, let me show you some actual results. So look, here's my my month so far. We're obviously in December. Again, first day, $1,000. Second day, just shy of 1,000. Third day, 1,000. Fourth day, 4,000. Now this day I did trade a lot more. I traded more than just 1 hour. I was on for the whole session of Ola Prime TV, so obviously I did a lot more trades. You can see 42 trades. So I made more money. On Friday, another 1,000. Monday, another 1,000. Tuesday, 1,000. Yesterday, another 1,000. Right now, yesterday was FOMC day. It was a bit hard, the market, a bit choppy. I took a bit more trades, and also just to highlight, when it says 42 trades, it means in and outs. Actually halve it to get the real amount. Same here as well. Halve it to get the real amount. So I didn't take actually 42 trades. I only took 21 on that day and 15 on that day, right? But anyway, my point here is, right, I have a rule where I hit $1,000 or I lose $1,000. That's it, right? One or the other gets taken out, right? If I lose $1,000, done. I walk away. All right, it's a losing day. It's no big deal, right? If I make $1,000, cool. I'm locking it in. Come back the next day, right? and I don't have to trade for that long, right? Some days is a little bit more tricky, like FOMC is always going to be a bit more tricky of a day just because there's lack of volume in the market because no one's really trading before FOMC. But I was live, I had to trade. Normally I would kind of take a day off on FOMC days, but I had to do it, and I managed to scrape together $1,000, right? But look, my point here is, you know, have a plan, right? Have a target. If you don't hit the target and you're realizing today is just a really tough day, like Tuesday for me was particularly tough for some reason. It's just the market just was being a bit annoying. You get those days, right? Every trader has them. I wasn't probably on top form. You know, I didn't quite hit 1,000, but I was happy. You know, basically $900. Who cares, right? It's pretty much there. So I locked out, right? Because I didn't want to sacrifice potentially losing that $900. You know, to try and make $100. It doesn't make any sense, right? So, and then look, I might have 1 or 2 losing days in a month, right? Imagine this day is a losing day. Obviously this month is December, so, you know, the Christmas period, you know, and also New Year's, you're not going to really, New Year's Eve, you're not going to trade. So the P&L is going to be lower on the month just because of the time of year. But, you know, if I have, you know, 2 losing days, all right, I'm still bagging roughly $18,000 on that month, which, you know, is on a 100K account, right? 100K account, you get multiple accounts. Imagine you got 500K, all copy trading on 5 accounts. You can see how you can get close to 100K a month. Prop money, you know, prop firm trading. You know, just by using the real data, having a proper strategy, having a proper plan, right? None of this kind of, you know, just guessing where order blocks are and all this malarkey. Do it properly, right? Have a plan, but you got to be strict with yourself. If you lose $1,000, walk the hell away. Step away. Don't risk blowing the account, all right? There's no point, you know, having $11,500 built up and then you lose it all or blow the account on the next day because you couldn't walk away on the losing day. That makes no sense, right? So you have to know when to walk away. Be strict with your rules, right? But apart from that, that, you know, just shows, right? You can bag a lot of money. And I also trade my cash account as well, right? So all these trades that I took, I also took them on my live account, right? On you know, my broker, a cash account. And just to show you, you know, I'm a true scalper. Look at my average trade time, 4 minutes, right? I'm a true scalper, okay? I don't hold trades for hours. This is true scalping. So for people to say, oh, look, scalping is bullshit, doesn't work. Yeah, it probably doesn't work if you're just using candlesticks. I agree with that, right? If you're trying to scalp using just candlesticks, good luck to you, you know? You're going to have a very tough time. You're better off intraday or swing trading, right? But if you got the data like I do, like and use the footprint, right, which anyone can have as well. This isn't like some industry secret that no one can have. You can have it tomorrow if you want, right? Costs about $10 for an CME subscription. TradingView, you need to have the premium TradingView. That's like $60 or something a month. Cost you under $100 to get all that set up. What the hell are you doing? You know, still using candlesticks. Use the real data. Learn how to read it. I teach it on this channel. And then be disciplined enough to actually follow a strategy, follow, you know, your targets and your losses. And all of a sudden, trading works. All of a sudden, you're making money. And then you're like, why the hell did I ever listen to anything else before that, right? This is the reality of trading. You can be a true scalper and make a shit ton of money doing it if you know how to do it properly. And that's what I teach here. So anyway, this is real data. This isn't made up. This is real stuff. And I always fail to understand when I watch a lot of trading gurus online. A lot of trading gurus, they'll you know, go on the candlesticks and they'll I don't know, they'll write something, you know, oh, this wick is you know, 80% of the body of the candle, and look at the expansion we had here. This must be a demand zone, you know, just here from this wick to this wick. This is the demand zone, and you know, this is where all the buyers came in, or maybe here's where all the buyers came in, and you know, if we revisit that area, you're gonna get blah blah blah. And I'm thinking, why are you guessing? And I say this all the time. Why are you guessing where the buyers came in? Looking at the candlesticks, I have no freaking clue where the buyers came in. Because the buyers, let's be honest, the buyers could have came in here. They could have came in right at the bottom here. They could have came in here. They could have came in here. They could have came in here. We don't know. The candlestick doesn't show you where the buyers are coming in, right? You just don't know. Okay, so, but with the footprint, it's you can see where the buyers came in. Oh, the buyers came in right there. Okay, oh, and they came in there again, and they came in there, and they came in there. Why are you guessing it? You know, and if you want to see where the first buyers came in, oh look, they came in here, right? This is the true demand zone, where they're all talking about demand and all this and order blocks. Where that's actually the real order block right there, right? That's the true order block. So yeah, you know, if you know where the order blocks are, you know, revisit. Sellers failed to push it down. Boom, you could have taken a long right there and made your money, right? You could have, as soon as the sellers failed to push it down, you could have jumped in, you know, stop at the bottom. Yeah, you could use that strategy and then, you know, target whatever. You know, some people have fixed 1 to 2 and all this. I don't believe in that. I think you should be fluid with the market. React to what the market's actually showing you and doing. Don't just have these kind of rigid rules. But again, you know, you could also argue this is an order block, right? There's a bunch of buyers came in here, right? I don't know, does that, oh yeah, probably. Kind of, you know, rejected, could have jumped in, whatever, right? So you can still use those kind of concepts, you know, the kind of, you know, break, retest, continuation type concepts, whatever. You can still use that. But why are you guessing where the order blocks are? If you're just looking at the candle, it's kind of hard to know. Do you know what I mean? Some people could say, all right, well, the order block should be there, right? Because you can see how the candle rejected there. Maybe the order block is this. Yeah, maybe. I don't know. I like, maybe. But like I just proved, the order block can be anywhere. You don't know where it is. It could be here. 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 Could be there. There. You just don't know. You're trying to figure out where it is based on, and I'll be honest, random bullshit, right? Okay. Little random clues that the market gives you. Oh, maybe the order block is between these two little wicks here because the market failed to push down and there was a rejection here, so this was resistance and now it's support. I don't know. Like, great if you're right. Well done, you know. Or you can just go to the footprint and see where the actual order block is. Do you know what I mean? Like, you can just... Why waste your time guessing? Just use the damn data. It's available to everyone. I don't know why you're guessing. And for people to say, oh, but Sam, this is only for futures. You know, I trade CFDs. That's fine. You know, use the data that the futures market gives you. Go to a CFD broker or prop firm, right? And trade the NAS 100. You have it on the CFD. It's the same chart, guys. Literally, it's the same chart, right? The futures market... the NASDAQ on the futures, the NQ, is the same chart as the CFD version, right? Sometimes they differ by like a point or a tick or like the most monumental tiny difference. But generally, 99.9% of the time, they are exactly identical, right? So whatever happens on the futures market is gonna happen on the CFD chart, right? They're tracking the same damn instrument. Same with gold, right? The gold futures are the same as the gold CFD. And you can even do currencies, right? You want to trade the euro, the pound, whatever. You have them on the futures, right? 6E is the euro, right? For example. So you can trade all that kind of stuff, right? Granted, there's a few random currency pairs on Forex that you're not going to have on the futures, right? But all the major stuff that most people trade is available, you know, futures and CFD. Why are you not making use of the data? It's right there. It costs like $10 a month or something silly like that, right? And then you can have access to the footprint. You can have access to the real data and you can make real informed decisions when it comes to your trading, right? Even if you're a long-term, if you're not a scalper, even if you're, you know, let's say, you know, an intraday trader or a swing trader, you can look at the 15-minute footprint, right? There's so many different strategies that you can use. I'm just going to go to the candlesticks, for example, right? Like, what is it? The 5-minute opening range strategy or whatever it's called, right? So the opening range is here. This candle is the 15-minute opening range, right? And then you play like a breakout or something. All right, it didn't really happen in this market, but if it did happen there, for example, right, the next day, switch over to the footprint, right? Even if you're an intraday trader, let's start looking at what's going on. Oh, look! If you were ever confused that you should be selling in that moment, look again. Same thing applies. Look at all these buyers. Now, of course, you have to adjust your eyes because the contract size is going to be a lot bigger on 15-minute, right? So it's a lot bigger area. But look at all these big buyers coming in, all trapped at the top. Huge, huge buy contracts. We start trading below them. And look at all those sellers. Jump in for a sell. There's your rejection. Clear as day. Join. And boom, go back down. However you're, you know, however you decide to target your you know, take profit, etc., whatever. So you can still use your strategy, the way you trade, but use the extra data that is available, right? Because again, there's a lot of people when they're trading candlesticks, right, who would probably jump in on that candle once it closes. And they always say candle close, candle close. Biggest load of bullshit on the planet, right? Don't wait for candle closing. I understand why people do it, because they're, you know, they don't have the data, right? They're not using this stuff. And then most people will target like a 1 to 2 or something. Oh, look, you would have got stopped out on this trade, right? If you used just the candlesticks. But if you used the footprint, right? Your entry would have been a lot better. You would have probably got in as soon as you saw those heavy sellers come in below the heavy buyers. Stop would be about the same. And where would you exit? Oh, look. Right here. Look at all 1,000 contracts coming in. All these big heavy sellers. Like, these sellers came in quite heavy. They were still able to push the market down. You're still holding. You're holding. You're holding. Now we print another 1,000. Lots of heavy sell volume coming in. But we start drifting above. Oh, that's your first sign. This might not work out. You might want to start getting out. Now, you could be really super cautious and get out here. Or you can try and wait. You know, sellers are still trying to push the market down. They're still failing, right? 800, 600 contracts. They're not working. We start trading above them. Heavy buyers coming in. Again, big sign. Look at that, 700 contracts above all those sellers, right? That's your second clue to get the hell out the market. If you haven't already, get out now. And if you're really late to the party for whatever reason, you want to be super, super cautious, you really want to hold on, why the hell are you holding once you see 2,000 contracts, 1.6, 1.1, look at all of that buy volume come in, right? If you're still not out the market, then I'm sorry, the problem is with you. It's not with your strategy and with the data, because this, by all means, is the absolute get the hell out that market if you haven't already. What the hell are you doing holding this trade, right? But if it were me, I probably would have got out around here somewhere, right? Probably this, not right away. I would have been a bit cautious. Would have had my finger on flatten. I probably would have got out here, to be honest. But either way, I would have got out in this kind of region, right? In real time. So, for me, using order flow, right? Even as an intraday trader. Now, I don't intraday. I prefer to scalp just because it's, you know, I mean, I can do the same thing, but it happens 50 times a day, right? I can make my money a lot quicker. My trade would have ended up looking like that. Now, great. All right. Look, it's a 1.6. You still grabbed pretty decent risk reward, right? Because remember, your entry would have been a lot better. You would have had almost a 1.2. And even if you did target a 1.2, actually, you would have hit it if you had a fixed 1.2 before you would have manually got out. But with me, I would have, got out when the market tells me to get out, because I'm fluid with the market. That's why I don't have rigid kind of rigid risk rewards and stuff like that, right? And if I really wanted to be extra on it, the moment I saw all those heavy buyers start coming in and sellers are trapped, I would have jumped in again, right? I would have jumped in again. I would have had my stop this time just below all those heavy buyers, right? Because if we break below those heavy buyers, the trade's not going to work out, right? Because if we trade below those heavy buyers, the trade's not going to work out anyway. So I would have jumped in anyway here, right? Really tight stop. And okay, my first sign that I would be a little bit cautious is if I saw all that volume come in. It would have scared me a little bit. But if you actually look at it logically, right? Look how much volume came in. 2,000, 1,000, 1,000, 1,000. But look how small the candle is. It's not able, the sellers are not able to push it down. So I would have stopped and thought, actually, no, we're all right. If we trade above these sellers, that's amazing. Like, that would be awesome. That would be the best thing ever. And we do. We start trading above them. I would have held on to that trade and be like, yep, let's keep it going. Let's keep it going. Let's keep it going. And where would I get out? Let's have a look. Well, okay. Well, the market closes, actually. We're at market close here, so I would have been forced to get out. And that's why the volume dies off, because the market's actually closed. Right? It closes at 10 p.m. in the UK time. So this is market close, this candle, right? So this candle right here, this market close. So on the futures, you don't hold overnight, right? You would have been anyway. My broker would have kicked me off anyway, so it would have closed me out here. But either way, because I was wondering, I was like, why is the volume gone so small all of a sudden? And I realized the time, it's market close. So yeah, but you get my point, right? Using the order flow, using the footprint is the way to trade, right? Let's just be real here. It's the real way of trading. It's don't just look at the candles. The candles give you not enough information. You get a snippet of information. The footprint gives you everything you need to know. All right. So I hope this video has been very useful for you. If you want to see more videos where I break down live trades, and also, learn more about the footprint, how to use it. There's so many ways you can use the footprint. If you want to learn all that, go ahead, subscribe to the channel. Okay, and also tune in to Ola Prime TV. All right, there's a link in the description. You can watch me trade live, and you can interact with me. I can break things down for you. It's all pretty good. But apart from that, guys, thank you for watching, and I'll see you again very soon. Take care.